Hi, and welcome to this third part on payroll for the Math for Business and Finance. Again, as usual, if you don't understand something, feel free to pause the tape, go back over it, watch it a few times. And if you, between the textbook and the videos, if you still don't understand something, feel free to contact an instructor either via email or by telephone. Okay. So, as a quick recap, the first two parts, we discussed an overview of how to do payroll, and we found that there's a gross pay, and then we have these deductions, and then the last video we had covered federal withholding, state withholding, and local withholding. All right, in this video we're going to cover FICA, FUTA, and SUTA. Now, FICA is basically Social Security and Medicare. Okay. What you're looking at here is a table from that Circular E, the 2013 edition, and this gives you the information for calculating your Social Security and Medicare based upon last year, the year before. But what I want you to see is that this constantly changes, and I had alluded to that in previous videos, that certain information changes, and every year the government will send you one or more than one update letting you know what parameters you need in order to make the deductions. Down here on the right is what's in the textbook, and even though it's not current, this is what we're going to use, because it doesn't really matter what the parameters are. It's the idea of the concept of how to calculate it. Okay, so we're going to use, for Social Security, we're going to use a rate of 6.2% and Medicare 1.45%, and there's going to be a base of 97.5 for Social Security and Medicare no base. Now, what this base means is it's a limit, and you'll see what I mean in a few minutes as I kind of like take you through an example of what happens with in order to be able to calculate Social Security and Medicare. The same thing happens for FUTA and SUTA, where there's like a $7,000 limit and a percentage that's applied to that limit. Now, FUTA and SUTA are federal unemployment, and SUTA is state unemployment. Now, I'm going to sidestep real quick here and kind of explain something. Right, I had said that in previous videos. In previous video, we had our gross pay. All right, and then out of that we had our deductions: federal, state, local, and then we had our FICA. Okay, now FICA is Social Security and Medicare. All right, when you've deducted all that plus any other deductions that you might have, like uniform deductions, union dues, alimony, palimony, child support, withholdings for taxes or whatever have you, that all goes into an other category, and you're left with your net pay. Now, I had also alluded to in the beginning that in like part one, that most people don't really realize that they're actually being paid more than what they get. And they see that they know that they're going to get $10 an hour for 40 hours a week, and they think they get paid $400 in gross pay. After all the deductions, they end up with, say, $300 for net pay, and that's what they kind of expect. But they don't realize that this here $400 is actually greater, and it's for the reason why it's greater is because of these three reasons: FICA, FUTA, and SUTA. When FICA is calculated, all right, remember we had Social Security and we had Medicare. Okay, but what happens is the government says to the business, "Mr. Business, we need you to remit to us 15.3% for FICA, which is both the Social Security and Medicare. Half of it is the responsibility of the employee, okay, and half is the responsibility of the employer." So on your payroll register, you had seen the columns for taxable earnings, and I had also had handwritten in FUTA and SUTA. All right. The reason why it said taxable earnings is because it was the amount that is going to be used as the basis for the calculation. In other words, what part of this paycheck are we going to use in order to apply the percentages to? Okay. So when you're calculating your gross pay, when you have your gross pay and you come down here to Social Security, you have to look and say, okay, how much of this paycheck are we going to apply this 6.2% to, and how much of this paycheck are we going to apply this 1.45% to, right? And that'll give you, when you deduct that, you end up with your net pay. But like I said, the government wants 15.3 or whatever it is percent, and half of it is the employer contribution. So if I had an extra if I had a withholding for Social Security of say $30 and an additional $10 for Medicare, right? You know, that would contribute to your bottom line, saying I'd get a net pay. But you don't realize that the employer has to kick in an extra 30 and an extra 10. So really, you didn't get paid $400. You got paid $440 plus an additional amount that the employer has to kick in for FICA and SUTA, and let's say that's 10 and 5. Okay, so really you end up making like $455, not $400. Okay, that's because of these additional employer contributions that they have to make. All right, that you never see in your paycheck. Right now, we understand Social Security, that's in there for when you hit retirement age and you start collecting off the government, and Medicare is there for health insurance is when you hit retirement age. The FICA and SUTA, like I said, are federal unemployment and state unemployment, and what that is the government doesn't want businesses to just hire and fire. Oh, I need you for a day or two and just let you go or whatever. They want the business to hire people and keep the people. All right, they don't want you to be letting them go. So what happens is they have a percentage that they have to pay, and based upon whether they lay off people or fire people frequently, this rate will go up and down. Okay, the less people they lay off, the lower the rate. The higher the frequency of layoffs and firings, the greater the amount. Why? Because when you get fired or laid off, you can go collect unemployment. There's a pool of money sitting there waiting for you when you get unemployment, and that you can collect on. So yeah, when a business doesn't let anybody go, all right, then that rate will be low, but they still have to kick something in, because maybe someday it might be that you have to fire or lay somebody off. Or what happens when the business closes? Now all of these employees have to, they go to the unemployment office and start collecting. Well, there has to be money there for them. So even though they never let anybody go, they still have to contribute, and it just sits there, until that time. Of course, if they frequently let anybody go, the rate is high because somebody's always showing up at that unemployment office. So that's how the FICA and SUTA work. Now, let's talk about how to calculate the FICA for Social Security and Medicare. I had talked about this here. This base, I actually like to call it a limit, all right, not a base. And the reason why you'll see in just a second. With Medicare, there is no limit. There is no base, no limit. So if you had $22.50 from our payroll register, or $400 like our example that we've been using, 10 hours a week at 40 hours a week, for Medicare, right, there you would take 1.45% of the full $400, or 1.45% of the full $2,250. But Social Security works different. Okay, it has a base, a limit of $97.5. So I'm going to give a hypothetical example here to kind of show how this works. Let's say at the beginning of the year, and this is January 1st, right? Nobody has been paid anything. Everybody has a zero wage, and let's assume that everybody gets paid on a monthly basis. Okay, So at the end of January, we're going to get paid. Right? Now, up here is this limit of 97.5. Okay, and let's just say, for argument's sake, we'll make it real easy, that we get paid $10,000. Okay, I wish, but let's just say, okay. So at the end of January, you're paid $10,000. Well, your year-to-date, and this is important, and this is why you have to keep track of your year-to-date. At the beginning of the year, your year-to-date was 0. Okay, now you were just paid $10,000. All right. So what part of that $10,000 is still below this limit? Well, obviously the full $10,000. So now you're going to be taxed at the 6.2% on the full $10,000. Okay, and whatever that is, that's your deduction. And remember, on the payroll register for Social Security and Medicare, that's being withheld from you as the employee, and for the employer, since it's a 50-50 thing, if you calculate it on the payroll register, it's you know how much it is for the employer. Okay, with FICA and SUTA, you have the taxable earnings column, and that's what we're talking about here. You would put in this $10,000 for Social Security, and you would also put it in whatever amount is for FICA and SUTA in that taxable earning column. Right. That's the amount of the wage from that paycheck that is taxable before you apply the percentage. So here we would take 6.2% on the full 10,000. That's what, $620, and that would be how much your deduction would be on your payroll register. All right. So now let's go to February. Okay. February, you're paid an additional $10,000. Okay. So year-to-date for January was $10,000. Now you're paid an additional $10,000. Okay, what portion of that is below the 97.5? Well, the full $10,000. Okay, so 6.2% would apply against this full $10,000, and that would be an additional $620, and that would make your year-to-date $20,000, right? Because you had 10 and 10. Right, now let's fast forward all the way to September. Okay, all right, this is September. All right, we've been paid $10,000 a month times 9 months. At the end of August, we would have been paid, which is 8 months. We would have $80,000. Okay, 10,000 times 8 months gives us a year-to-date wage. So this is August, and our year-to-date would be 80,000. Okay, now September, we're going to get paid an additional 10,000, right? And the same thing applies. How much of this additional 10,000 at the end of September is taxable? Well, all of it is still below the 97.5, so all of it would still be taxable, and you'd have to pay the 6.2% on the 10,000. Right? So now that makes your year-to-date wages 90,000. Okay, at that point, at the end of September. Now, you're going to get paid in October. Okay, an additional 10,000. Okay, now the question comes, how much of this 10,000 is taxable? Well, it's anything below that limit. So your year-to-date, and this is the important part, your year-to-date was 90,000 before you had the paycheck. Now, as you're being paid, right, your year-to-date goes up. Well, it's the amount from the 90,000 all the way up to the 97.5. So the taxable wages, the taxable wages would be $7,500. Okay, and that's what you would use to apply the 6.2%. Right, whatever that came out to, $420 some. Okay, just as a rough guesstimate. So the 750 is what, $7,500 is what you would use to apply the 6.2% against. The remainder amount, the $2,500, that's above the limit, is non-taxable. Okay, and any other wage above that 97.5 is not taxable. So you, as a payroll person, you're always keeping track of this year to date. And sure, at the beginning of the year, it's relatively easy, or you have an awful lot of employees who will never, I mean, if somebody gets paid $40,000 a year, or if they're on salary and they get $60,000 a year, yeah, it's all taxable. But when you get say a business owner who makes $100,000 a year or $125,000 a year, well, then you have to keep, start keeping track of this, okay, for that particular employee, because as soon as they get to that limit, the remaining amount over and above that is non-taxable anymore. Okay, so I hope you understood that. This applies for Social Security, and the same thing goes for your FUTA and SUTA. Okay, just the limit is like 7,000, and whatever the percentage is, I'm going to say FUTA is 0.8%, and I don't remember right offhand what SUTA is. Again, you're going to get, you're always going to be updated as to what these percentages are. But let's just, FUTA and SUTA work the same, so let's just give that same example, but we'll give it the same idea, but using FUTA. So we would start out at the beginning of the year, right, at 0 for gross for our year to date, right? Here's our, oops, I keep pushing that button. Here's our $7,000 limit, okay, and for January, right, you're paid $10,000. Nope. Oh, sorry. For okay. Well, let's do two examples here. Sorry about that. Let me erase that just a little bit. Eraser. And go back. Let's say you get paid. The first paycheck, the owner of the company gets paid $10,000. This is January, the end of January. Okay. He's only taxed on, whatever wages up to $7,000. Okay. So for his paycheck, even though it's the first paycheck, he's only taxed on $7,000 times 0.8%. Right. Whatever amount that comes out to, like, $5.60 or something like this. Okay, the remaining amount, the remaining $3,000, because it's above the $7,000 limit, is not taxable. Okay, let's go back over and another example. So here we're at 0, and here's our $7,000 limit. Okay, and the person gets paid, say $2,000, right? $2,000 in January. Okay, so this full $2,000 is taxable. His year to date at the end of January is $2,000. February, $2,000 more, right? All right, so that's still all below the $7,000. So the year to date is $4,000. Right. March gets paid $2,000, salaried employee, right? $2,000. Well, all of that's still below the $7,000. So our year-to-date now is $6,000. Right? In March, April comes, and gets paid $2,000 more. Okay, how much of the $2,000 is taxable? Well, the year-to-date was $6,000, and you're taxed on all the way up to the limit. That's $1,000. Okay. That's what you would be taxed on by 0.8%. Right? The remaining $1,000 of the paycheck is non-taxable, and then that employee, going forward, would never have anything else additionally taken out for FUTA and SUTA. So you can see that the FUTA and SUTA is really kind of important, because you get new employees during the course of the year. If they start out, say, in June, well, you have to start keeping track, because they can quickly get up to the 7,000. Or if they're not paid that much. I mean, think about it: $400 a month. I'm sorry, $400 a paycheck. Into 7,000. That's what 10, 15 paychecks. 3 or 4 months. So before they hit the limit. So you have to, as someone who's doing payroll, you're always constantly looking at this year-to-date and thinking about the limits. right? Whether it's the FUTA or SUTA $7,000 limit or the Medicare limit. In our case, it was $97,500. Okay, so I hope that was made that kind of clear. If not, you can rewind the video and play it again, read it in the book. And if you still have any additional questions, feel free to call and speak with an instructor, or contact us via email, and we'll help you through it. Okay, thanks, and have a great day.